Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your Friday update, and this is your weekend update for your financial markets for September 21st, 2018. And friends, I do the weekend updates a little bit different. We look first at one monthly chart, and then we do the rest of the things in the weekly so that we get an idea away from the daily charts as to where the markets are. Are they in support, resistance, what is going on? Now, it's been a wild week, as you know. We saw the dollar basically lower during the week. It was up today, but it's been a market that's been coming down while the euro had been going up. You'll see all that in a moment. And of course, you've seen the Dow Jones go to all-time highs, the S&P, but we've seen a laggard in the NASDAQ and the Russell, and a lot of questions in the marketplace as to, with the FOMC raising interest rates due this week, the 25th, 26th, that they're meeting again. Why has the dollar not been strong? And that's people are asking questions. OPEC meeting this weekend, so keep your mind on that too, what's going to happen there. But when we take a look at the monthly area chart of closes, how could you be anything but friendly? This market now, since 2009, just continues to move on. You get periods where you get corrections, no question about it. We just went through one, and now the market's taken off one more time. When we go to a weekly area chart of closes, and this is just closing prices, you can see how the market's just been moving on up and doing very, very nicely. There's an interesting pattern here. If you look at these breaks, we don't have a period yet where the market's seen a week recently where you get a lower low. Just haven't done that on a closing basis from the previous week that goes through previous break close. When we look at a weekly bar chart, this to me is the pattern that you're in. You've got this channel at work. It set itself up in April. It came out of rather choppy action, as you can see right here. And from that 28.78 to 25.29, it launched itself to the upside. And yes, you've got all your doubting Thomases out there. They're saying, nah, this market can't keep going. Unfortunately, those that are moving the cash so far have not been proven right. But do understand, there's nothing wrong with having cash for a rainy day. And this market has still got a pattern of higher highs, higher lows. 3 weeks ago, low of 28.65 is still the important number because that, if you took that out, you'd break the pattern of higher highs, higher lows. In terms of the 18-week moving average of closes, you did fight your battle here. And one of the things I teach in my charting course is that be it the 18-week moving average or the 18-day, it's often a number where from that number, as the market plays around it, eventually it moves away, be it an uptrend or a downtrend. And in this case, it tested it a bunch of times and decided to move to the upside. The 18-week is also over the 100-week moving average, which is over the 200. That is called a bullish setup in the charts. When you come to the Bollinger Bands are an algorithm displayed here as the black dashed lines that give you an idea of support and resistance as defined by this algorithm. The algorithm is designed to keep the market trading within the bands 95% of the time. You want the market to be able to step out of the bands. If it can't, what it does is, what's the point of putting them ever on the chart? You're never going to hit them. Got it? So by putting them there, you get an idea of resistance zones. And we have a market that's making a pattern of higher highs, higher lows. Momentum up is up because you're over the 18-day average. It keeps hitting these bands and backing away from them. It rolls back, but the trajectory continues higher. And you'll know that trajectory is changing if you break the pattern of higher highs, higher lows, which you haven't done yet. In terms of momentum is measured by the oscillator called slow stochastics, which are two numbers that crisscross each other. The formula for both numbers are identical. The difference is one uses, because this is a weekly chart, 3 weeks of data. The other uses 5 weeks. That's the whole difference. And as long as both numbers are staying over 80 and going sideways, the momentum remains still pointed to the upside. When we come to the NASDAQ, you're getting a bit of a different pattern. The legacy pattern is still one where you have higher lows, higher highs. But the short-term pattern has changed because you suddenly have lower highs and higher lows. Momentum, it tried to break down this week. It did not do a very good job of it. You want to see that red line again cross under 80 to get an idea of the market stepping down. Other than that, all it's got to do is stay like this and you keep the upside momentum in play. In the Dow Jones, this has been the strongest recently of all the indices. It wasn't always that way. The Russell was stronger than this recently, but these breaks have given ground with this sideways action. And you can see when I say sideways action, look at how sideways you were trading. Eventually the market will push on the Bollinger Band either to the upside or downside to create a trend. And you can see it started pushing on the upside August 31st, and it's been doing that right on through, taking it away from that. Is the market respecting the resistance of the upper Bollinger Band? You can see it yourself. You don't need me to tell you. But markets that lock in, like this market did back here, you always pay attention. Markets that lock in against the Bollinger Band, the upper one, are not saying they're weak. They're saying they're strong, but they're not getting ahead of themselves. In the Russell, while the daily charts look weak in the Russell and the NASDAQ, that's not the case here on the weekly. You still have the pattern of higher lows. You've got the higher highs. It has kept the upside bias. In fact, it hasn't even been weak enough to get back to the 18-week moving average of closes. And again, momentum is not turned down. Momentum often leads price. You just haven't had that yet. In the VIX, you tell me that you're not narrowing in and taking volatility out of the market. I know it doesn't seem like that because so many of these days are just in one direction, but you have not broken the volatility. Now, when you narrow in like this, let me give you a warning. The market will not stay like that. Eventually, it breaks out, and it breaks out big. Remember, we had this monster here? Look at how narrow the volatility got. So whenever I see that, I start realizing at any point, you can get something that's rather shaking to the market. In the 10-year notes, you've been caught between the upper Bollinger Band and the lower in a sideways pattern. Momentum is pointing down. I do not use an overbought, oversold reality to the market on weekly charts. I just look at the momentum. It is pointing down, the bias is down, but you're not able to break out so far of either side of those interest rates, which is interesting. Remember, the lower this continues to break, then interest rates are going higher. Now, you did this week close under the lower Bollinger Band. Will you stay under it again? You've done that in the past. It's rare to do 5 in a row, extremely rare. So one under, we'll see. Is it going to follow through? Don't know. But certainly the, if you will, the bias is down, momentum is down. You don't have a trend yet. I wish I could say that you did. In TLT, you've got a pattern here of a higher high and a lower low. It is following the Bollinger Band down and momentum down. Again, not a trend in the market, which makes sense with what we saw in the 10-year. The dollar index is in a downtrend on this chart. You have lower highs, lower lows. The target might be the 93.22 area. We're at 93.80 for all purposes. Momentum is still down. Resistance back up between the 18-day average of closes and the 100 at 95.31. As we come to the euro currency, it's the mirror the other way. You're rallying into the upper Bollinger Band, which is 118.78. We got up to 118.81.5 and backed away all the way down to 118.25 today. So you got up to that number, you backed off. The resistance area showed itself. Support is back at the 116.67.5 level. The trend is up. In the Aussie dollar, we have lower highs, lower lows. Now, I was going to put up the British pound, and I'll probably do that for you next week, but this market might be wanting to get back towards that 18-day average as it lost its downside momentum. See, this is what I call losing it, and we'll see if we get more of a market rally there, but you'd have to get over this 73.82 level to break the pattern of lower highs, lower lows. In the Canadian dollar, you're at resistance. So the market has rallied this week up. It's up for the week 77 points into the upper Bollinger Band where resistance should be uncovered. You're not trending. You have a higher high and a lower low. Momentum and bias are up. But as I said, I paid strong attention to what that Bollinger Band is doing. In the Japanese yen, look at the tightness of the ranges defined by the Bollinger Bands and how the market is in a downtrend. It has got lower highs, lower lows. It is pressing on the lower Bollinger Band. Momentum is down. A lot of resistance on rallies from 90.26 to 90.44 as I see it. And in Bitcoin, I think you're going to narrow in a little bit more here. The overall trend has been down. Lower highs, lower lows in the market. Resistance on the weekly chart, 68.40, about $100 away from where you're at. We then come to the energies. Now, you got up at one time where the Brent recently in the summer got up to 1098 over the WTI crude, then crashed to 261, recently went back up. In fact, while I was out of town last week, it got to 910, and this week it's lost $1 of that. So we are seeing it come back in. Support in this, if it narrows in, might show up around that 686 level. When you look at what's going on in the Brent, again, focus on the Bollinger Bands. Look at how the market went to the lower band, held it, came back to the upper band, starting to slip back. Momentum up, no trend. You've got a lower low and a higher high. When I come to the WTI, the U.S. blend, it is stronger than the Brent. That's why the spreads are coming in. You've got the higher lows, the higher highs. You're over the 18-day average of closes. Momentum is up until the market takes out 67.33. I think the bulls have control of this. In the Rebob gasoline, while the daily charts have gone up and the market is up for the week, 469 points, when you look at the longer-term weekly chart, it's not bullish. You have lower highs, lower lows. Momentum has not turned up. The bias is down. I'd be looking for resistance around the 208 level. And in the nat gas, what an interesting market. Fell down last week, made a challenge 2 weeks ago, really, of this 18-week average. Did I say 18-week? The lower Bollinger Band. Came back this week, got over the 18-week average into the 100-week. But you still haven't taken out the 299.30 level, which was the last high. If you did so, then you've got to look at the pattern. Do you have lower lows, higher highs? Even if you do so, you're into the upper Bollinger Band. A lot of resistance showing itself there. To me, the big play of this week, looking at it, and today, Friday, was in the gold market. If you looked at gold, it had a $20 range, went to the upper Bollinger Band, and right down it crashed in no time at all to the lower Bollinger Band. What does it mean? Because I talk about it in my chart analysis. I'm covering exactly that pattern that I was expecting. The commentaries there, chart analysis, price counts, and yes, seasonal charts where I'll take you back what the pattern is going in the year-end, yes, into year-end, over the 30, the 15, and the 5-year pattern, and then show you where you're at now, where the support resistance zones are, and give you an idea about it. How do you get my report? It's really simple. If you haven't received it already, it means you're not on my mailing list. So in order to get it, and yes, we call our lists, by the way, if you ever put on you don't want to get anything, you're taken off of it forever. Give us a call. Go to our website. All you need to do is click up here. It'll take you to our website front page. Click on any of our offers. You'll see the gold report. Sign up for it there or the other offers. I'm Ira Epstein. Have a great weekend.